A real estate agent called me in early July of last year, frustrated. She'd just gotten a penalty notice from the IRS. Her income tax return for the prior year had been filed correctly. She'd paid what she owed, but the IRS was still charging her $1,100 in underpayment penalties because she'd missed all 4 estimated tax payments during the year. She didn't know they were required. Nobody had told her. She'd been self-employed for 2 years, made good money, filed her return on time, paid the full balance due, and still owed penalties for not paying throughout the year. I'm Bev from bookkeepingcoach.net and Can-Am Bookkeeping. Estimated tax payments are one of the most misunderstood obligations in self-employment. And Q2 deadline is June 15th. That's days away. If you're self-employed and you haven't been making quarterly payments, this video is for you. Let me explain exactly what this is, why it matters, and what happens if you miss it. She was a residential real estate agent, a great year, about $190,000 in commissions, working as an independent contractor. She tracked her expenses carefully, had a good accountant, and filed a clean return in April. She owed $42,000 in taxes, federal income tax plus self-employment tax. She paid it, all of it, on time. And 3 months later, she got a penalty notice anyway. Here's why. The U.S. tax system operates on a pay-as-you-go basis. For employees, this is handled automatically through paycheck withholding. For self-employed individuals, sole proprietors, independent contractors, partners, S-corp owners who draw a salary, there's no withholding. So the IRS requires you to estimate your tax liability and pay it in 4 installments throughout the year. These are due April 15th, June 15th, September 15th, and January 15th. If you don't make those payments, even if you pay the full balance when you file, the IRS treats it as if you borrowed money from them throughout the year, and they charge interest on that loan. The underpayment penalty isn't a punishment for filing wrong. It's interest for not paying on time. For her, $42,000 owed with 0 payments made during the year generated $1,100 in underpayment penalties. That's roughly $275 per quarter she didn't pay. Not catastrophic, but entirely avoidable. And it gets worse the more you earn. Here's what makes this particularly frustrating for business owners who are new to self-employment. You can have a great year, do everything right, file a perfect return, and still get penalized because of the timing of your payments. The IRS doesn't care that you paid it all in April. They care that you didn't pay it in installments throughout the year. And for higher earners, the stakes go up significantly. A business owner with $300,000 in net income who makes no estimated payments can face underpayment penalties of $3,000 to $5,000 or more, depending on timing. All of it avoidable with 4 payments per year. Here's the framework every self-employed business owner needs to understand. First, who is required to make estimated payments? If you expect to owe at least $1,000 in federal tax for the year after subtracting withholding, and your withholding will cover less than 90% of your current year tax, or less than 100% of your prior year tax, you are required to make estimated payments. For most self-employed business owners, this is every year. Second, the safe harbor rule. You can avoid the underpayment penalty entirely by meeting one of 2 safe harbors. Option 1, pay at least 90% of your current tax year liability in estimated payments and withholding. Option 2, pay 100% of your prior year tax liability or 110% if your prior year adjusted gross income was over $150,000. If you match either threshold, the IRS will not assess underpayment penalties, even if you end up owing more at filing. Third, how to calculate each quarterly payment. The easiest method, take your prior year total tax liability and divide it by 4. That's your quarterly payment. It's not perfect. It doesn't account for a good or a bad year, but it satisfies the safe harbor and eliminates the penalty. Fourth, where and how to pay. You can pay online at IRS Direct Pay through EFTPS or by filing Form 1040-ES with a check. EFTPS is the most reliable because you can schedule your payments in advance so you never miss a deadline. The Q2 deadline is June 15th. This is not the same as April 15th. It's a separate payment for income earned April through May. Missing this specific deadline does not trigger a late filing penalty, but it does trigger underpayment interest for the period it was unpaid. 6. State estimated taxes. Most states that have income tax also require quarterly estimated payments on the same or similar schedule. Check your state's requirements. Missing state estimated payments generates separate state penalties on top of the federal. So with June 15th right around the corner, where do you stand? Option 1, you've been making quarterly payments all year. If your Q1 payment went out April 15th and your Q2 is scheduled for June 15th, you're on track. Make sure you're hitting the safe harbor amounts at least. Option 2, you haven't been making payments and this is new information. The Q2 deadline hasn't passed yet. Calculate a payment using your prior year tax liability divided by 4. Send it by June 15th and set calendar reminders for September 15th and January 15th. You can't retroactively fix Q1 underpayment, but you can minimize the penalty going forward. Option 3, you're not sure what you owe, what payments you've made, or whether your books are accurate enough to calculate a reasonable estimate. This is the most dangerous position because without reliable numbers, any estimate you make is just a guess. And guessing on tax obligation has consequences. If your books aren't in order, the estimated tax calculation is the least of your problems. The underlying numbers need to be brought right first. If you just heard sounds familiar, you're in the right place. At bookkeepingcoach.net and Can-Am Bookkeeping, we have courses designed specifically for small business owners who want to understand their numbers, protect their business, and stop finding out about expensive problems too late. Step-by-step training from 30 years of real-world experience. No judgment, no jargon, just practical knowledge that saves you real money. Head on over to bookkeepingcoach.net and find the course that fits you where you are right now. The link is in the description below. Subscribe for more QuickBooks and financial management tips. And I'll see you in the next video.